If you're going to compare lenders, compare lender fees to lender fees. Don't look at total numbers. You're going to completely confuse yourself if you do that. By the end of this video today, you're going to have a better idea of the explanation of closing cost, what makes that up, and why in the heck a lot of lenders cannot answer this question for you. Well, there's a reason for that. Stay tuned, and I'm going to cover it all in today's video. Welcome to your one-stop shop for anything and everything mortgage education. My name is Stephanie Weeks, and I have helped thousands and thousands of customers with their mortgage financing. I've been a loan officer for 17 years, recognized in the top 1% of loan officers in production for the past several years in a row by Mortgage Executive Magazine. I also have been recognized by the Scotsman Guide of Top Originators. I drop new videos every Tuesday and every Saturday. Please subscribe to the channel, hit the bell to be notified, and don't forget to share with your friends and family. Whether you're purchasing or refinancing, closing costs can be confusing. And without a lot of data points, the lender really can't give you a good idea of your closing costs, and that confuses a ton of people. You see, there's a difference between closing costs versus prepaids versus down payment versus cash due at closing. Today, I'm going to dive in, cover all those things for you, so when this video is finished, you're going to be like, I am so glad I spent that time with her today. Number one, I'm going to go through 5 different things today. The first thing I'm going to talk about is closing cost versus prepaid items. Closing cost is it's not limited to this, okay? But this is an example of the majority of what comprises of closing costs. Closing costs is generally the lender fees, the appraiser, the title company, the clerk of court. Those are closing costs. It seems short and sweet, although that list can very quickly be a large number of items. That is separate from prepaids. Prepaids is your prepaid interest from the day of closing through the first of the next month. It is taxes, insurances for escrow setup. It's also on a purchase. It could be your first year of home insurance, flood insurance, so many months of property taxes separate from the escrow setup. That is what prepaids consist of. Then you've got if you decide to pay discount points. That's going to be a choice. Well, hopefully it's a choice. And hopefully it's one that the lender goes through with you, but discount points is another thing as well. That is all separate and apart from down payment, and all those things combined can be what is due at cash due at closing, due for cash due at closing, mess that up. On a refinance, as an example, you might be able to roll this stuff in. On a purchase, you might get the seller to help with these items, and that's all fine and dandy, but you always have closing costs, you always have prepaid items, even if you waive escrow, and you have a choice whether or not you're gonna pay points or not, and then that is always the total cost of the loan. I like to say closing costs and combine everything, but it's actually broken down into those different categories, and you wanna make sure that you understand that and know what you're looking at. There's been so many times where people have compared one lender to another and said, oh my gosh, that other lender's $4 grand more in fees. That's terrible. Guess what? They were less in fees, but they were more accurate on the escrow setup for the estimate. What does that mean? Well, maybe the one that looked a lot cheaper did not have in the itemization the first year of home insurance, which might have been absolutely required in that example. You've got to know what you're looking at, what you're comparing, and what those differences are. Let's dive into number 2. Okay, number 2 is closing cost versus down payment versus prepaids versus points. Let's talk about a purchase first. When you're purchasing a home, you have down payment, if any. You have closing costs. Remember, lender, appraiser, title company, clerk of court, generally speaking. Plus discount points if you choose to buy the rate down. Plus prepaid items. That could be the insurance is due up front, possibly for a whole year, plus your escrow setup. Those things combined would be your cash to close or cash due at closing on a purchase. Now, that cash due at closing, maybe you gave a deposit. That would come off of the cash due at closing. Maybe the seller's paying some of those closing and prepaids for you. That would be subtracted as well to get your final cash due at closing. But that's a quick little summary of the cash due at closing on a purchase. Let's say you're doing a refinance, and let's assume that you have equity in the property and that you want to roll in all of your closing costs and all of your prepaid items. Most lenders will require the appraisal to be paid up front and not rolled into the loan. So in a best case scenario, you go to a refinance and all you paid out of pocket, because you pay other things, even if you're financing them, all you pay out of pocket is the cost of the appraisal. The prepaid items and the closing cost in this example is rolled into your loan. There's no down payment required because the equity in the property that you own, which is your own equity, is basically like a down payment. You've already given it, built it, earned it. I hope that makes sense. Just keep in mind, there are all these differences. Know what you're looking at and know what you're comparing so that you know, are you getting a good deal? Are you comparing apples to apples? Do you understand what you're looking at? That is number 2. Closing cost, the nitty gritty. Did you like how I made a special title for that one? Anyway, closing costs. Like I said, lender, appraiser, title company, clerk of court. Appraisers charge different fees, sometimes based on different loan types, definitely based on different property types, and based on your occupancy can be different as well. Let me give you some generic examples. Let's say if a single family home that you're buying, which might be a single family, a condo, a townhome, and you're going to live in it, that might be $500. Let's compare that to the same thing, but you're going to use it as your secondary residence. That would probably also fall under the $500 mark. Let's then compare that to your buying property to rent it out. The lender's probably going to want additional schedules to know what that property could rent for. Things like rent schedules and additional pieces to that appraisal to approve that loan. That appraisal might be $650 compared to the $500. Another example is sometimes when you get into really large homes and very large loan amounts, appraisers charge more for that. I've seen that be $600 or $700 before. And there are other times where they're just doing a drive-by, which is not real frequent, but that's going to be a lot less expensive. That's the appraiser section. Then you've got the title company. Remember in the very beginning of the video, I said, blah, 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 and it's really short and sweet, but it's not as short and sweet because it could be a lot on the list. What I mean by that is, appraiser, 1 fee, simple. Maybe 2 if there's a second inspection. So let's say appraiser, 1 to 2 fees listed. Title company is the title company fees, the clerk of court fees to record your new mortgage, and cancel your old mortgage, or 2 if you have 2. This does not apply to you if you're doing a purchase. There's no cancellation for you. And so they've got recordation fees. They have their title fees, which might be doc prep, notary fee. I mean, there's a bunch of different things that it can be called or categorized as. And then you've also got your title insurance. That is always a question from everyone. I am not a title insurance expert. I defer to the title company for that. But almost always when someone's refinancing, they say, why am I buying title insurance again? There are 2 different coverages for title insurance. There's the policy that protects you and your investment in the property. And then there's the policy that only protects the lender. Ask your title company and your realtor for more information on that. But that's 2 different fees that can be listed. Owner's title, lender's title. The title company fees, the recordation, the cancellation, the closing protection letter. See how those can add up and kind of be a lot of little items pretty quickly? That's the title company. So you said appraiser, lender, title company. So now I'm going to circle back to the lender. Each lender charges different amounts, and they all call their fees something different. Like one lender might have an underwriting fee, and that encompasses a bunch of different things. One lender might have an underwriting fee and a processing fee, or a doc prep fee, or an admin fee, or a tax service fee, or a flood service fee. There's a lot of things. What is your lender charging you? Don't confuse that and add that to the title company fee or the appraiser fee. In my opinion, those are separate. If you're going to compare lenders, compare lender fees to lender fees. Don't look at total numbers. You're going to completely confuse yourself if you do that. I always say that one of the really difficult parts about my job as a loan officer is when, let's say you come to me and you want to be pre-approved for a $200,000 house. We don't have the house yet. We don't know if it's in flood zone. We don't know if it's new or old. I have no idea how much the home insurance is. I have no idea if it needs flood insurance. If it does, how much is that? But I, in good faith, have to give you my best estimate of what your closing is going to be. And that's honestly difficult because I want to be as accurate as possible. When you're looking at settlement charges, which is closing costs, prepaids, points, all that. When you're looking at that, let's say if that itemization, which can be on your fees worksheet, it can be summarized on page 4, your details of transaction of your loan application. It's also on your loan estimate and on your closing disclosure. You might look at that and there might end up being a total of 17 to 20 line items listed. And every lender's different, but for me as an example, most of the time, only 2 of those fees are mine. I'm trying to guesstimate 15 other fees that I have nothing to do with, right? That's one of the reasons why it's really difficult for the lender to give a good, accurate estimate of closing costs in the very beginning. Can you finance your closing costs? Super great question. I'm so glad you asked. Most of the time, the answer is no, but I'm talking about a purchase. With a refinance, a lot of the time, depending upon your equity position, you actually can finance the closing costs and roll them into your loan. On a purchase, your cash due at closing that's required is a down payment, if any, plus closing costs, plus points, plus prepaid items equals total cash to close. There are a lot of misconceptions if you can roll in your closing costs. If the price of your home is $100,000, most lenders are not going to lend you $100,000 for the cost, plus let's say $6,000 or $7,000 for the closing costs and prepaids. They're not going to lend you $107,000 on a home that's valued at $100,000. And I know what you're thinking. What if you're buying the home for $100,000 but it's worth $120,000? First of all, good for you. But second of all, the equity is not yours until you have closed and purchased that home. So even if the value is $120,000, if your price is $100,000, you're probably not getting a loan for $107,000 on a purchase. I really see this misconception a lot with my veterans. A VA loan will finance 100% of the price for eligible veterans. The veterans then do have to come up with closing costs and prepaids unless they can negotiate something else, which I'm going to talk about in number 5 on how to negotiate and not have to come up with all the closing costs since you usually can't finance them on a purchase. But VA, as this example we're talking about now, VA is not going to give you $107,000 on a $100,000 purchase. They will finance the price 100%, but they're not going to finance closing costs on top of that. Again, keep in mind, we're talking a purchase here, I'm not talking a refinance for this particular conversation. With the purchases, there is one loan that I'm aware of that will actually allow you to finance the 107 if it's worth 120 and you're buying 100. It's a USDA Rural Development or RD loan. That's the only one that I've seen that if there's enough equity in the home, that they might actually let you finance in your closing cost. That's probably 1% of the time when that situation happens, and that's why I don't lead with that in this conversation. I want everyone to be prepared to either pay the closing costs and prepaids in addition to down payment if they have a down payment or are required to put a down payment, unless you negotiate otherwise. Can you negotiate help with closing costs? Yes, you can if the seller's willing to help you. I am hoping that you did not get deterred when I said that most of the time on a purchase you can't finance in closing. I get it. Many people do not have thousands and thousands of dollars laying around to buy a house. They just don't. I wish that wasn't true, but they just don't. So let's use our $100,000 example again. Buying a house for $100,000, you're doing a 100% loan that will not finance in your closing costs. The value of the home is $120,000. You usually don't have that much equity, but it's just an example. So you're going to ask the seller to actually accept a price of $107,000 and the seller to pay $7,000 toward the buyer's closing costs and or prepaid items. That wording is important. If you do it this way in this example, price is now $107,000. It's a way to finance 100% of the $107,000. You're basically financing in your closing costs, but it's worked out to where the seller is shown as the one that's paying it. It basically comes out of their proceeds. If they were willing to take $100,000, and you're able to write it for 107 and it's going to appraise for at least 107, they're giving you the 7 back. They're still getting the 100,000 that they were trying to shoot for. So it's just a workaround that does help people finance more when they need the assistance with that. I feel like there is so much more that I can say and so much more that I can go into. The challenge is lending is complicated, and it's a lot of if this, then that. There's no direct, straight, always answer. We joke about that. The second that you say always in lending, you better just stop yourself, because nothing is always and nothing is never. And so I say that because I want you to know basically every loan is like a snowflake. There are no two that are the same. The more educated that you can be, the more knowledgeable that you can be, the more knowledge that you can apply, the better situation you're going to put yourself in. I'll probably do a couple more videos on closing costs just to try to like break this up and narrow it down. Just to recap again one more quick time, we went through closing costs versus prepaids. We went through cash to close versus down payment versus closing costs versus prepaid items. We went through closing costs, the nitty gritty, and then we went through can you finance your closing costs? We covered a lot of misconceptions. And then number 5, can you get the seller to pay your closing costs? That's what we covered all today. I hope you enjoyed the video. As always, I have a download for you today that's going to help with a little more information. I'm going to drop that in the link below so that you can download that freebie. Have a great one. Do me a huge favor. Type WIN, all caps, W-I-N, in the comments below if this video has helped and you definitely have a better understanding of navigating closing costs and wondering what in the heck. Hope it's helped. Type WIN below. Let me know. I really hope you've enjoyed today's video. I love doing them. I love getting your feedback, and I really hope that it's worth your time. I'm definitely striving to make that so. If you liked today's video, please be sure to give it a like. Don't forget to subscribe to the channel. Please share the channel and the videos with your friends and family. Also, let's connect on social media. My Twitter is @lonelady_Steph. I can never remember that. My website is StephanieWeeks.com, and my Insta handle is _TheRealStephanieWeeks.